Good afternoon. My name is James Napier. I'm one of the co-founders of the Scottish Net Zero community. Thanks to everyone for participating in this event. It's a really exciting one across our Whole Future series, which is really to talk about some of the practical challenges that can be solved by new technology. And I think one of the things that comes out of the transition to net zero is really just how much information we're going to need to plan, act, and ensure that we're moving in the right direction. And I think what we're going to talk about with blockchain this afternoon, I think has an opportunity to form a major foundation on which to build that solution on. And I'm delighted to say that we've been joined by a diverse panel this afternoon, but people who are at the leading edge. So if that's all I want to say in the introduction, if I can ask the panel to introduce themselves. So Mike, did you want to go first?
Yep, so Mike Davies, I am the Chief Architect of Biodiversity and Ecosystem Futures. So a UK-US organization, and what we do is we've developed a platform utilizing blockchain for carbon projects to provide transparency in them, but also to help transact environmental assets as well.
Brilliant, thanks Mike. Divaldo?
I'm Divaldo Rezende. I'm from Brazil. I'm the Vice President of Ecologica Institute, and I have been involved in this market and climate change for more than 25 years.
Brilliant, thank you. Kieran?
Hi, Kieran James Lubin. I'm the CEO and co-founder of BlockApps. We are an enterprise blockchain company, so we have our own platform based on the Ethereum protocol that we use across sectors to help enterprises improve their business operations, typically in a wider value chain or supply chain context. And we, over the last few years, have found more and more of our work to be in the general sustainability area. Working a lot actually within agribusiness, but of course the energy sector as kind of a key focus area. And we've built out technology based on top of our platform to help with emissions reporting, tracking, especially as products are moving through a wider supply chain context.
Brilliant, thank you. Victor?
Hi everyone, I am co-founder and chief product officer of BlockApps, which means I oversee our strategic product roadmap and our large-scale implementations. And as Kieran just mentioned, we recently just launched our sustainability data platform that we call Trace Carbon. In addition to my role at BlockApps, I'm one of the founders of the Enterprise Ethereum Alliance, which is the world's largest open standards blockchain project.
Fantastic, thank you very much. And just to everyone that's attending, if you've got a question, please just throw it straight into the chat, and as it comes up, and we'll put it into the conversation. Before we kind of dive into exactly how it's going to affect climate change and how it can be used, if I can come to you, Victor, just a lot of people have a confusion about blockchain. So can we just get rid of the blockchain cryptocurrency issue right up front, and then we can move on?
Yeah, sure. This is probably the #1 question that we face, So what is the difference between blockchain and cryptocurrency, and how are they related and how are they not related? So, blockchain is the technology that powers cryptocurrencies, but primarily it is used for tracing things. So you could trace, for example, cryptocurrencies, you could trace carbon credits, you can trace data as well. Now, with cryptocurrencies, we call these public blockchains because anyone can join them, but there are some downsides. Obviously, there are sustainability downsides, but also the requirement that you have to share the data with anyone who joins the network. Whereas with permission blockchains, which is what we're going to be talking about, it's really about you can control who is on the network and you can control who has access to what data. Also, they are much, much more efficient than these public cryptocurrency blockchains. So, they are no more energy intensive than, say, running a website.
Brilliant, thank you very much for that. So if we can split the conversation, I guess, into two parts to get the conversation going. In terms of, and I know you guys cut across both parts, is blockchain to support carbon reporting and understanding where carbon emissions sit, and blockchain to support the trading of carbon credits, and also how you actually prove where the carbon credits have come from. I guess Mike and Devaldo on the latter, could you just give us a view of what the value add of blockchain is in terms of ensuring that any carbon offsetting, and I know there's a lot of debate around greenwashing and additionality around that, where really the value add for blockchain is in underpinning a global carbon credit market?
Yeah, Devaldo, do you want to give a quick overview of the market, just so give that background?
Devaldo, you're muted.
Sorry. This week at COP26, Forest Trends announced that voluntary market reached the size of $1 billion in 2021, from January to November of this year. The best way to potentialize my contribution for this panel is to bring to the audience related to challenge opportunities for blockchain as I perceive them. I have been in this market for more than 20 years. I will highlight some challenges in the market. One of the main challenges is recording emissions from companies with a particular challenge around Scope 3 emissions. Lack of transparency in carbon credit pricing, largely due to the opaqueness of over-the-counter trade and transactions. Lack of climate finance for small project developers and communities. Developing projects is very, very expensive, and retailers that provide funding typically expect at least 30% of the carbon credits generated by the project. Other issue is the project development is heavily dominated by Northern Hemisphere entities. We don't have any problem on that, but it's important to reinforce that most of the projects are developed by organizations on the North Hemisphere. Another interesting thing is many buyers lack the experience and knowledge on which credits to purchase. So purchase from the retailers, which compounds the issue mentioned previously. Intermediaries are making a lot of money and a lot of profit from the market, with marginal benefit for either the end buyer or project developer. I see as the main opportunities for blockchains are improve the transparency of carbon credit pricing, increase the efficiency of carbon credit transactions, offering the opportunity to facilitate peer-to-peer transactions without the need for intermediaries, more efficient registry system that offers great security. And I am asking my colleagues of panel if there are any other opportunities for blockchain in this market. Things to be aware of is blockchain can be very energy intensive. It is important that sustainability is considered when selecting the blockchain infrastructure to build on. Many issues in the market cannot be solely fixed by technology and need operational solutions too. For example, incentivizing Scope 3 emissions data sharing. To finalize my contribution in this panel, I would like to share some information and data about the 2021 Voluntary Carbon Market Update. As I said, Forest Trends Ecosystem Marketplace just released some data that I would like to share. The volume transacted so far is 298,400,000 million tons of CO2 equivalent. The value is in dollars, $1 billion, with an average price per unit ton of CO2 equivalent of $3.37. More than 1,429,338,033 tons of offset issuance tracked. More than 6 6.88 million tons of offset retirements tracked, 14 registers tracked, an increase of 54% more offsets issued in 2021 compared to 2020 year to date. More than 72% of offsets retired in 2021 compared to 2020 year to date. How to guarantee that all this data and information are reliable and updated? How to secure the integrity of those informations? How to secure that a double counting will not occur? That is some of the questions that I hope my colleagues will be able to answer based in the most upfront state of the art for blockchain technology to the carbon market. Thank you, James.
No, brilliant. Thank you, Divaldo. Mike, do you just want to explain how blockchain supports all of that?
Yes, I think, would you want to just go on mute, Divaldo? So I think in terms of the core thing with blockchain is, in my view, or the big challenge is data governance. So you need to make sure that before you record anything on the blockchain, because it's immutable, that it's accurate. So what we're seeing is that there's a growing number of carbon registries, and the carbon registries is there to record details on the projects, but also it's where the ownership of the carbon is recorded. So seeing an increasing number, and something that we provide as well as a carbon registry utilizing blockchain, because you have that audit trail, but you also have that benefit that there's that immutability. So you know that if you're seeing a carbon on that registry, there isn't double counting, and that you can track its origin. But building on top of that, on the transaction piece, the real value of blockchain is it can enable peer-to-peer transactions. So it can eliminate that big blocker right now, which is the need for escrow accounts, but also the intermediaries, and enable buyers to purchase direct from the projects. And I think that's the real value, in that if you can have that linked with a registry as well, it can mean that the registry is automatically updated in real time, versus right now, how it normally works is you do a transaction, and then you have to go into the registry and manually update who the new owner is, which opens up opportunities for exploitation of the industry, really. And that's where we've seen issues of crime and so forth, where the same carbon credits have been sold more than once to different parties, and they've been double spent, and it just undermines the entire market. So I think that's one of the real values of blockchain, is that adds that transparency layer, but also that efficiency level. So you can cut out the unneeded, or were previously necessary, intermediaries, and facilitate those peer-to-peer transactions, which is going to benefit the most important parties, which is the project developers. Right now, they're having to pay upwards of 40% commission to some of these intermediaries, whereas if you have a peer-to-peer, it means as a buyer, you know that the money you're spending actually reaches the project, and also means if the credits are being sold at retail prices, then they're sold directly to the project. The project doesn't have to sell at wholesale prices to an intermediary who then sell them at resale prices. So it'll ultimately mean more money will go to the projects, which is what we need, because they can then reinvest that money, and it can go towards expanding the projects, but also distributing any revenue with local communities to have broader impacts on the projects themselves.
Yeah, I was talking to a group doing a rewilding project, and they were offered by a carbon exchange £6 a tonne for carbon, for all of their carbon for the life of the project, which didn't seem to incentivize them to do much more than the basics to do it. Well, that's brilliant. Thank you. Just coming to the other side, the carbon reporting, and I guess looking at Victor and Kieran to come in here, is we were at the Race to Zero Partners meeting on Monday. They were talking about all the organizations that have pledged, large corporates, universities, hospital groups. They're then all looking to move into the plan and proceed. But if you take an organization, say 100,000 employees, 50,000 suppliers, probably several 100,000 SKUs that they buy, the data set for that, Kieran, is enormous. And if you're going to get that consistently and regularly to act, inform and report, you have to have a system, I guess, like blockchain that maintains not just managing the data, but also the integrity of the data going forwards.
Yeah, that's exactly right. We're finding that large corporations have some handle on their scope one. If it's really internal, they can use varying levels of estimates to get a good understanding of where they are. When it comes to scope 3, they are especially in the dark. They can do estimates for what is attributable to their trading partners, customers, etc. But really they're just estimates. And there's a lot that is proprietary, say upstream of you in the supply chain, that you may not know how to do the calculation for. And that data needs to move with the products as you say purchase them, so that you're able to add that estimates to whatever you're doing with your internal processes to come to an overall number. And so to your point, it's a big challenge, and the systems that the enterprises depend on today are not built for this level of cross-enterprise collaboration. Again, we're seeing that business is actually getting more and more interconnected. The number of vendors per large enterprises seems to be skyrocketing as businesses get more focused on their core competency and less on doing everything vertically integrating, et cetera. But it's creating this enormous data challenge. And so, for those who have a program in which they're aiming to, yes, reach a certain emissions target, ideally net zero, you need to have some sort of holistic program that takes into account what you're doing, but what everyone else that you depend on is doing as well. And there needs to be a new technology infrastructure for that. And yes, that is really where we sit. Going back to carbon offsets, of course, this is part of the picture, right? And to some degree, while for specific offset projects, you may have a better handle on how to calculate what the offset was, there's still room for externals to validate the methodology that you use to do that calculation, the attributable footprint to any sort of source materials, if you will, that you've purchased. And so the value chain or supply chain challenge remains. And so we see these as complementary approaches. Again, carbon offsets are inequivalent. You really need to investigate the underlying project to see if you believe that the offset is real, legitimate, additional, not double sold. And so in some sense, we're working on two sides of the problem, although we are starting again with kind of current business operations versus necessarily trying to source the projects ourselves. Victor, anything to add?
Yeah, I just wanted to add, one of the big challenges, and we're hearing very little conversation, everyone's focused, on the uniqueness of carbon credits, which of course is very, very important. But when you do scope 3 reporting, as Kieran mentioned, you really need to also follow the uniqueness of emissions, because you need to apply and understand what is being passed to my company versus another company as they're moving through the value chain. So I think that is sort of the core property of blockchains. They enforce uniqueness. The other thing that I think that's really important to understand about blockchains too is that they're decentralized, meaning that there isn't one owner that controls all the data. It's not, we talked about intermediaries, but intermediaries can be both brokers as financial intermediaries or data intermediaries like, Facebook, where they control the data. And in the world we're moving into, where the value of sustainability information is going to be so high, by having a system that's not owned by a single party allows the data to be more reliable between all of the parties. And there's a group benefit that blockchains bring to the table. Really, it's the only technology that's designed from the start to be multi-party and, decentralized and enforce uniqueness. So it's kind of a perfect storm that, we're facing this huge data problem, but we also now, for the first time, have a technology that may be able to help us do it in a more reliable manner.
Brilliant, brilliant. We've had a question come in that says, so could we use blockchain to quantify scope 3 supply chain and identify hotspots for prioritization, from Karen?
Yeah, Kieran, do you want to take this, or should I start on this?
Say continue. Yeah.
Yeah. So that use case that you just described is exactly what we are doing. Why we launched the Trace Carbon Network, which is basically to identify product and project effectiveness on how it applies to really, being able to do any kind of reporting use case. Two big reporting use cases, obviously corporate reporting and also product labeling. How do I apply, the emissions or what has happened across my entire supply chain to a particular product or to a particular report that I'm putting out? And it was designed to help companies kind of shine a light on areas that they need to really work on. Because, in most cases, we work with large energy companies, we work with big ag companies, we work with financial players too. But like where they're trying to get their hands around is kind of like, instead of, they make a holistic promise, by, we're going to be net zero by 2030 or 2025. But really, it's all the little steps along the way that they have to get their handle on. And right now, that's the biggest challenge that they're having, because, that goes everywhere from every piece of your operation, travel, running your buildings, manufacturing, all of those pieces kind of have to come into play. And the companies themselves are coming to us and saying, we don't have a handle on this. Can you help us with this? And this is what we're helping them with.
Great. And one of the things, and I think quite rightly, a lot's been talked about a just transition. So global north, global south, big organizations, small organizations, for-profit, not-for-profits. How, and it's a general question to the panel, how accessible is blockchain to companies and organizations that probably are small or cash poor?
It's a good question. I can kind of start with my answer. What we're finding is quite often, you've seen this with other technologies that involve complex supply chains, even in, say, procurement, right? Quite often the large companies who, have the largest footprint, produce the most products, have the most impact on the supply chain, tend to, foot the bill for the infrastructure for smaller players. And so those folks, in certain cases, may not have to pay until they reach a certain size threshold, or even in other cases, maybe not in this particular instance, sometimes are net beneficiaries of the system from a dollars perspective. So there are cases where, let's say, large enterprise wants certain data. There's effort to collect that data, and some of the smaller vendors have it and are, not necessarily excited about doing new work. There may be rebates, some compensation going along those existing relationships for them to go to that extra effort. So that's, obviously it's there's something to be done there as far as who, the big organizations may not necessarily like this, but they're the ones who are making sort of the most aggressive pronouncements as far as the rapidity of progress towards net zero, and have the most ability to make this sort of change. Like quite often with any sort of technological innovation, it's the rich companies that sort of prove it out for everybody, get the adoption started, and then subsidize the sort of reduction in cost that comes over years of usage.
And I guess probably, and forgive me if this is a bad comparison, but I guess for you, Mike, would you see blockchain essentially becoming a user-led marketplace? So I can set up a YouTube channel and start promoting myself if I'm an individual or an organization in sub-Saharan Africa who's got to develop a carbon sequestration project. Could you see, does blockchain allow me to go into a marketplace and create everything I need to trade directly?
Yeah, I mean, I think it's important not to kind of lose track of what it is. It's basically just a technology solution. It's a bit like cloud. You're going to have an interface for that which users are going to interact with, and they probably won't even realize that they're interacting with blockchain. They'll get all the functionality they need. So I mean, in our case, people can register an account for free and utilize blockchain to sell assets or buy assets. They're interacting with a blockchain, but and can access it for free. But they don't have to deal with any of the complexities around managing a node, or any of the other aspects, which is often one of the big barriers for a lot of organizations if they're kind of dealing like the blockchain kind of lower level details, because you've got to manage a node, you've got to manage all your credentials, your private key and so forth, and that adds a lot of complexity. And having a solution where just an interface for interacting with a blockchain makes it a lot easier for those SMEs to interact with it. And what will likely be the case will be that there will be consortiums or organizations who have their own permission blockchain for particular use cases. So I know when I was a few years ago working with a large FMCG organization, and they were developing a large permission blockchain for tracking soybeans and also palm oil. And that's going to be a specific use case for that blockchain. And you're going to have different people who can access that network and so forth. Now, obviously, they're going to decide the business model is how it works. You have to pay a membership fee, or is it openly accessible? But it really depends use case by use case as to how SMEs and so forth can interact with it. It'll probably be quite. There'll be some organizations that will just run and manage their own, and then it'll just be almost a subscription-based model. Or just how you normally pay for most software services. But then there'll be others which are completely open source and can be accessed for free as well. So there's such a broad range of how it could be applied, just like cloud, for example. It really depends on which vendor you approach, the approach you take. It really is such a breadth.
And I guess, Devaldo, does this really open the market up for carbon sequestration projects, for carbon trading? Is it the game changer that allows a global carbon market to function properly?
Yes, James, I think so. As an example, our institution has been working with this market for more than 15 years. And we create a standard called social carbon standard. And the social carbon standard used to be associated with VCS and social carbon. VCS for the carbon part and social carbon for the core benefits. Now we are launching the new social carbon that is a full standard, using the state of the art in terms of technology of blockchain for the registry, for the marketplace, and also an innovative mechanism to generate resources to invest in the project, in the project documentation or project implementation, called Green Impact Unit. Without the technology, it would be quite difficult to do this new step for an institution based in the middle of Brazil, with the Brazilian savanna and Amazon rainforest, to have access to different projects, communities, and activities around the world. I think it's quite a good example, and I would reinforce that everyone will be very keen to wait for the launch that's going to happen next week, and it'll be something very interesting for the market.
Brilliant, thank you. And I guess it falls to me as a panel host to kind of play devil's advocate of it, is if we move forwards in time and we get a carbon value, that either a credit or a carbon tax on emissions, as human beings, we tend to be really good at finding ways to cheat the system, and rather than incur the cost or do the hard work, if I can find a way to cheat, that might be the best way for me. Obviously not anyone on this panel, but that's human beings. So how does blockchain prevent people from cheating the system and putting in bad data or double selling carbon credits?
Let me start, and anyone else is free to jump in. This is part of the reason we're trying to start with existing activity, right? So a lot of the source data for our systems is coming from a current enterprise operational system, an ERP, something of that nature. And what that does is ensure some completeness of coverage. Like, you're not going to stop doing the business transactions you're currently doing. And so the system sort of says, all right, well, you took this flight, attribute a footprint. You got to kind of go line item by line item to make sure that you've got a good level of coverage, and there's no, you can't start hiding things that occurred, because in the end, those sort of have to be recorded, right? So again, if you're kind of starting from a perspective where you're just sort of trying to offset something, it may be a bigger challenge, right? But I think that's the really big point. Just take behavior as it is, and then attribute a footprint to it, and then work off of that data. And it's certainly possible over time that will be in certain countries it is it'll be increasingly a regulatory requirement. But I think it's more of a merging of your current business practice with the obligation to attribute and report, then sort of, that's the path that will lead us to a no cheating future. It's like, how is it the case that pretty much all business transactions, at least in the United States, the sales of a certain size, et cetera, the sales tax is reported? Well, your accounting system pretty much tells you that you need to do the sales tax part, right? So it's just baking it into day-to-day business practice is the key point on reducing cheating. Also, just greater automation over time. So in many cases there are IoT tie-ins in some of the projects that we're supporting. So getting source data and validating that source data over time makes a huge difference as far as sort of preventing any sort of shenanigans with the data. In the end, you want to trust humans as little as is reasonable, and it's not even necessarily malicious. It's just to avoid error as well, and that will help kind of complete the picture as well. I'll hand to anyone else.
Yeah, I just want to add a little bit to what Kieran said. I mean, one of the great things about the blockchain, or in terms of cheating, is that no data can ever be erased from the system. So what this allows you to do is sort of run tools on the data over time that allows you to see what is more accurate than the others. Like let's take away, we've Mike mentioned, agricultural tracking projects. We've done a bunch of those, and we've seen that. I don't think anyone is cheating. I think it's just honest mistakes being made in the system. But because we identify every system and every data point from where it comes from, we can identify patterns over time to say, okay, this data is more reliable than this data. And it allows us to kind of help organizations to see where they want to focus on. But the other part of the picture, I think, is it kind of ties back to the last question about cost. We actually, in many of our projects, we really think about how do you incentivize the participants to do the right thing, right? So, we mentioned agriculture, right? So not only do we not want to charge growers to participate in our network, we are trying to get them to adopt practices where they get paid more for their crops. So they have an incentive to want to participate and provide accurate information and participate in these things in order to get that higher value. So, at the end of the day, their crops can be stamped with sustainably sourced or use proper renewable ag practices. Those kind of things are kind of important to think about, but blockchain allows you to kind of have that traceability of information.
Brilliant. Mike, did you have anything to come in on?
Yeah, well, I think it's been mentioned, but the key thing is that the data governance. If you have trash in, trash out, so if you have really bad data going in, because it's immutable, you can't change it. So you can have a system which is immutable and that is kind of the source of truth. But if the data recorded in the first place isn't true, then it completely undermines the entire system. So having that data governance to ensure that if anything's uploaded, it's verified and can be attested that is accurate. Because if you don't have that, then you can just have all sorts of dodgy data on it, which again undermines the system.
Okay, great. And then from a user point of view, clearly there's more than one blockchain solution for that. Just your views on whether, like a search engine, we like to see one that dominates globally with maybe a few niche ones for different things and a few smaller ones. Is it a case that there's multiple blockchain technologies, VHS and Betamax, and ultimately there's a big fight and one wins. I mean, you know, if how do users who may want to use access to different blockchain platforms, how do you guys see the user experience working? Is it a race to win, or is it something that's much more synergistic?
Good question. I can lead off. I would say that there's elements of both. So it's a network technology, and network technologies tend to be sticky and reach really high percentage market share in certain areas. That said, what we're kind of seeing is that there's a concentration of effort around, you know, vertical industries and particular use cases, and that at least on the enterprise side, those that become very invested in a sort of focus-built either blockchain network or sub-network of a wider network are not likely to change. And in fact, they're extensible systems, so they may start using blockchain for sustainability reporting, realize it has other benefits, say, you know, managing overall wider supply chain inventory visibility. We're seeing, you know, lots of inflation in the United States, and it might help to be able to know where products are available to be able to optimize sourcing and cost for the end consumer. So you might be in a situation basically where it functions like a platform, and you deploy a blockchain network or subnetwork for one use case, and you end up using it for other ones. So I don't believe you're going to see one global blockchain platform or protocol. You're not going to see 30 either, right? Like, it's going to be a handful. There will be a degree of interop between them. And I think they'll, again, like I said, they'll win in certain use cases, geographies, industries. But the end user will still use the blockchain through a mobile or web interface, probably will not notice all of these underlying details. There'll be plenty of work for, you know, technology companies like us in figuring out how to make all of this smooth and hidden from the end user. You know, I'm not so worried. Like, if you were a large business or small business looking to get into blockchain, I wouldn't wait for a overall, you know, single standard to emerge, right? I think there's going to be multiple for some period of time.
Excellent. Anybody else? Okay, so I guess the next thing for me is are there limitations? You know, does blockchain serve certain parts of the solution, but then stop? Does it need to be linked to other things, or ultimately does blockchain scale and can be, you know, can you go all the way through from reporting the end of your supply chain right the way through to ensuring additionality of carbon sequestration projects globally on exactly the same blockchain?
So no one's jumped in immediately, so I'll start again, but happy to cede the floor. So I would say certainly it can, and it's best used to capture a whole process versus a part of a process if possible, because being within the same blockchain network really guarantees the integrity of all the data, the immutability, et cetera. If it starts somewhere and ends somewhere else, you know, you lose some of the benefit. There is always the sort of physical to digital bridge, if you will, and this is related to the fact that these are living systems composed of humans, right? So on the one hand, you've got to get data inputs of some kind. Sometimes those are manually entered by humans. Sometimes they are sourced from, you know, automated IoT systems, as I mentioned. So that's always a touch point along the way. And additionally, I think, you know, there's always going to be a role for auditors of some kind in, you know, verifying statements made about overall, you know, what was the methodology I used to calculate the footprint? What was the effectiveness of an offsetting project? I don't think humans are going to get entirely out of the loop. Rather, they'll just be participants in the system as well. And there'll be a signature that says, okay, not only did I do this calculation around how effective the offset was, proving that it was actually additional, but this, you know, other company agreed with me. So, you know, I think it's, they're really coexisting with the real world. I think people in many cases think of it as blockchains are their own new world, that everything has to be completely automated and execution, et cetera. They do that, but, you know, you have to realize they're living systems kind of composed of humans all interacting on the same network, if you will.
Just to add on top of that, I think there's a particular challenge I see around the full life cycle, so calculating the entire carbon, but then having the carbon credits as well, because they're two completely independent things. And I think going back to the previous point around particular use case and particular blockchains, the challenge will be that there will be several organizations who will help organizations do scope 3, and they will likely all manage their own different blockchain. Now, if they're using different protocols, that will mean it's difficult for them to be interoperable. And then you have the voluntary carbon credits or compliance carbon credits as well, which will likely be using a different blockchain. And again, if they're using a different protocol, it's going to be even more challenges around making it interchangeable. That's definitely going to be a challenge to have everything in one place. But it's, again, I go back to cloud just because it's a good example. I don't think that's necessarily an issue, because if you have the interface which connects, for example, with one blockchain for the scope 3 aspects and pulls data via APIs, and then it connects to another blockchain for the carbon credit aspect, that can work perfectly fine as well. You could have some applications which use AWS for other aspects and then Google Cloud for other aspects. It doesn't have to just use the same blockchain for everything.
Okay, great. And I guess just trying to pick on some of the questions that are coming in through there. So if it's facilitating financial transactions, so that may well be taxing emissions or trading carbon credits, just the view of the panel on the regulation that's likely to come. I know I want to go back to cryptocurrency, but I know, countries like China have said you can't do it. There's other things people say, well, we have to put tight regulation on this. Do you see this as being a highly regulated market, a light touch regulated market? Just interested in your views.
So I'll give my 2 cents and keen to hear the others, only because I've had to analyze all the regulatory and legal aspects for some of our products. So it depends on the actual product itself. So if you're dealing with a emission unit, which is a fully regulated unit, then it doesn't matter if you're using blockchain, it's got to be regulated. The entity behind it has got to be regulated by the relevant body. In the UK, that would be the FCA or European Union and so forth. If you're looking at voluntary carbon credits, for example, if you're looking in it all depends on jurisdiction. If you're looking in UK, then it's not a regulated asset. So technically, there wouldn't need to be regulation around that, because it's a voluntary market whereby there's no real tangible benefit from purchasing and using an offset, because it's a claim rather than anything guaranteed, because it's all based on estimates and calculations. There's no physical product there. So it really depends on the type of product. If you're looking at scope 3 and calculating the emissions and so forth, that's not going to need to get regulated at all. So it depends on the use case. If there was a single blockchain used for trading of carbon, for example, between different countries, that would likely need to be regulated, because it's a regulated asset, and therefore there needs to be the corresponding regulations to support that.
Well, I guess if we move to a carbon tax, a global standard carbon tax based on emissions, then the way that you calculate and report your emissions for tax purposes, I'm guessing, would have to start to have some level of regulation to it.
Yeah, in that case, though, I don't know if necessarily blockchain will be the solution, because you would need everyone to be using the exact same, be on the same hymn sheet, all have an account on the same blockchain, and it would add quite a lot of operational challenges, that in particular. Whereas if you just had it that it was kind of hub and spoke, where you have the kind of rule setting, it could be UNFCCC, and then each country is then responsible for actually implementing that carbon tax. Because again, the challenge is going to be, there's already the systems in place to take that tax, and it's just configuring the systems to take the relevant tax for that carbon aspect. Adding in blockchain into that is just going to add a whole heap of extra complications, which probably, if you look at the grand scheme, it's not going to add much value for that particular use case.
So
yeah,
I guess
I just want to add something to your comment, is that I think, there are a lot of moving pieces here, obviously, right? There's the regulatory aspect, there are standards, there are certifications. Like, if you just look at those pieces of the puzzle, I think what we're seeing is something kind of like what we're seeing in the agriculture space, right? Where, customers are demanding and investors are demanding that companies behave in more ethical manners, like say organic certification. But it's sort of up in the air what organic certification means at the start. Just people say they're doing it, and that's sort of where we are right now today. But what we're seeing is this interplay between the regulators and the standards bodies to kind of create more structure to say, how do we report this information, and how do we incentivize that reporting of information in that proper way. So what blockchains do in that kind of puzzle is they create a place to put that information that it can be verified by everyone later on. So that's sort of the components of how it all kind of fits together in certain ways. And like Kieran said, is that they are extendable. So like as those standards or as those regulatory requirements change, we're going to see those being evolved on the blockchain data models that we're creating too. So that's something we think a lot about when we build our applications on blockchain.
Brilliant, thank you. And then just kind of looking to the near-term future, the Scottish Net Zero community is about mobilizing 380,000 SMEs primarily. So a lot of small disparate businesses. We've got the critical decade, from now up until 2030, which is fast becoming less than a decade. When we talk to SMEs, they say, right, I've done my scope 1 and scope 2, and we say, great, now you've done 10% of your carbon footprint. They kind of just start weeping and shaking and saying this. So just, I guess, the panel's view on when would you see a blockchain market likely for smaller businesses? If I'm GlaxoSmithKline or Coca-Cola, I can pretty much establish my own across my supply chain. But when could, and it's aligned to Michael's questions, when could Scottish businesses start accessing, do you think, a blockchain market that works for them?
Maybe I'll jump into, I think it will be sooner than you think. And I think because you're seeing the places who are your customers, the Tesco's of the world, all of these, the places that are buying things are moving these requirements, and they're going to pass it on to all of their suppliers, right? We're seeing this in the United States, in Canada, in the UK more generally. And I think all the work that they've done on the scope 1 and scope 2 will help them lead into feeding that data into blockchain solutions. We're actively working on those kind of solutions with those large companies right now. And a key element is to get those data from that other source. So I think within the next couple of years, you're going to be asking, in the same way people ask you to send invoices in a certain format or something, you're going to start to see requests like, hey, we'd like you to send data to our blockchain system in this format. Great.
And I think it probably tends to be those companies that sit in the supply chain of larger companies that will feel the touch of blockchain first, I guess.
Yeah, and it's kind of like Kieran said, is that big companies, they have larger pocketbooks, they can make the investments in things earlier, but it's something that everyone can leverage as we kind of move forward in the future.
Perfect. And a lot's been come out of this week about carbon labeling on products, and I know that the CMA, the Competition Markets Authority here in the UK, has said misleading claims about sustainability will be punished. So is the ability to carbon label products one of the key value adds of blockchain?
I'm very passionate about this, even though I've been talking more, but yes, this is one of the key use cases. And, transparent labeling of any product is something that we've been working on. Like this honestly is something we've brought from the ag world into the sustainability world, right? So I use the example of, organic certifications or non-GMO type certifications. Like we've done projects like that in the organic world, and, but it's not enough anymore simply to have, from like the regulator side, to simply just have a stamp. You gotta say what backs up that stamp that is on your product that you're making the claims about. And the benefit from it, from those companies that are doing it, is they can sell those products at higher value than their normal commodity product too. Customers are recognizing that as a value. So I think there's a really, really strong mutual benefit.
Great.
Yeah, anyone else want to add anything to that?
I was going to ask Divaldo a question related to that. Is does blockchain democratize it? So you mentioned before about developers of projects getting better revenues. Victor's just talked about being able to sell products labeled correctly, potentially for higher value. Does that help address a just transition for especially organizations and individuals in Global South?
I believe so, James. I think what we see in the market is it's good technology drives to new solutions and new strategies. And of course, this can democratize more the participation of small organizations. And also it's strategical to think about new goals and new strategies in terms of emission reduction. Brilliant.
We've had a question in from Karen, which I'm sure you guys can see, is can people work out your margins from blockchain? And my guess would be probably not, but I'd get an expert to answer the question.
I'll jump in, and anyone can jump in as well. So actually, one of the key design points for our blockchain, and this is really what distinguishes us from a public blockchain, but it's also the type of company we are, where we really focus on the needs of businesses, has been to make it so that the data is shared in a granular manner. So a public blockchain, you put data on it, sort of for better or for worse, everyone can access it, and that data might be not everything you're doing, but it's on the ledger and it's there sort of for all to see. So what we've done is created a setup in which even within a blockchain network, you do not have to share all the data with all the parties. Basically, there is you're able to share the data with just those that are relevant. So for instance, maybe you have a customer that needs to know the carbon intensity of your products, and you have suppliers and you need to know the carbon intensity of their products to come to an overall number. That data can just be shared one step at a time in the supply chain, and an auditor can go check at every step that all the data is accurate. They can check the calculations, etc. But the calculations don't need to be available in full text for everyone, because they can reveal a lot about the proprietary nature of your production processes. And so there's a granularity. You certainly could, if you wanted, share everything, but to your point, there are commercial concerns, often even on overall volumes, but especially as the details of production processes tend to be highly proprietary. And so we've just always employed a granular approach whereby the right parties can see the data at the right time. But it tends to never be everybody, basically for the reason Karen mentioned, that people do not want people to infer customer lists, margins, supplier lists, if that's not something that the businesses involved in these systems want to have.
Thank you for that. I'm conscious we're kind of coming up to 5 minutes to go, and as you guys know, I'm not an expert on blockchain, but is there any aspect of the technology, the solutions, its applications that we haven't really touched on yet that any of you would like to talk to the audience about?
Well, one thing I'd add on top of the discussion is, of all the applications of blockchain, and this is my personal opinion, the carbon markets is probably the best application, because you're dealing with an intangible asset. If we're looking at selfishly the carbon aspect, the carbon credit, it's an intangible asset, whereas a lot of it, pretty much most other assets have a digital, a physical presence, which adds a lot of complexity. So if you had art, for example, yes, you could tokenize, so you could record details on the art onto a blockchain, but you've still got to manage that physical product. It's no use having a digital ownership and then that art getting lost or it gets stolen. Whereas because carbon is an intangible asset, it makes it the perfect candidate because it can really utilize all the value of blockchain without all the complexities associated with physical goods.
Yeah, and I would add, I would hardly endorse what Mike said, but also add to it is that one of the benefits about applying it to sustainability is there are no existing legacy systems that need to be replaced. Like, this is a brand new open field, and we have the opportunity to kind of, instead of trying to bring over something that wasn't designed to do this task, we have the ability to, you know, apply the right tool to the task from the start, which is exciting.
Perfect. So I guess in terms of for the audience here, what are they likely to see in terms of blockchain coming? I know we talked about a couple of years, probably big things, but what are the next steps of actually getting blockchain commercialized within the marketplace?
I think one aspect is making it easier to interact with. So having REST APIs is key, so that people who aren't blockchain experts can interact with it and utilize its functionality without being a specific having experience in a specific program to develop on it. So right now, it's getting a lot better now, but historically you had to be an expert in a particular programming language to be able to utilize it. Whereas if you have RESTful APIs, which anyone can connect with, you can utilize blockchain in a matter of minutes rather than having to spend months trying to build all the code to be able to interact with it. And that will significantly reduce the barriers to entry as well.
Brilliant.
Yeah, and I would also add, you know, we've talked about interoperability between different blockchains, but it's also, to Mike's point, is that interoperability between existing systems needs to be there as well. So in many of the use cases that we do, some people don't even know they're using blockchain. Their data is being flowed and they're using the system they always do, but they're just getting the benefits of it. And that's, you know, that's work that I think a lot of different groups, including ourselves, are working on right now.
Fantastic, fantastic. And I don't think there are any more questions that have come in from the audience, but I guess for me, this has been fascinating. I mean, I knew a little bit about blockchain and now I know a little bit more about it. And I have to say, it's something that I think it makes me excited to see what's possible. We're, as I said, I guess slightly repeating myself, but the struggle for companies is going to be managing data, access to regular data, one, to be able to make decisions, but secondly, to demonstrate that they're actually making real progress. And the whole issue about greenwashing, certainly is, in our discussions with the UNFCCC, is absolute paramount, is doing this properly. It seems not much point spending a huge amount of time getting to net zero and then proving it wasn't net zero and we haven't happened. So that amount of data, that amount of clarity, the ability to make proper decisions with good data certainly needs a technology underpinning. So I think for me, it's been absolutely fascinating. I think it's for me, why can't we have blockchain today would be my question. It's something that people are crying out for, but I'm sure you guys think exactly the same. So, and I'm sure you would say it's here in one form or other, but before we close, does anybody have any final comments?
Well, we're working very hard to make sure you have blockchain as soon as possible. So
I'm sure you are.
I think all of us are. So.
Yeah, absolutely. So, well, great. Then it's left to me to say thank you very much. I'm sure everyone attending this would have got some good value out of it. As I say, certainly, I think it's something that is exciting and certainly something that, as we move the community forwards, that I think we'll have people who want to get involved in the development of it for sure. But certainly, I think it's a game changer for users. So, yeah, Michael wants Scotland to be the first blockchain country to track carbon. Well, hopefully, if we've got anything to do with it, Michael, we'll make sure that we can be at least first or upper quartile for sure. So, but thanks to everyone for attending, and I hope those attending have got value from the session. So, thank you very much to everyone.
Thank you.